We will be going over the datasets, the earnings, and the SPY technical analysis for the week of June 8th, 2026. And with that said, let's go ahead and jump straight into the data. Now for this week, we do have some fairly large datasets. We have the CPI on Wednesday and the PPI on Thursday. However, for the most part, it's fairly tame. On Monday, we have the one-year consumer expectations from the New York Fed. Not really too worried about that. For Tuesday, we have the ADP employment change weekly. Now, we have been seeing the labor market, quote unquote, be a little bit hotter, but so far it's still not out of the woods. Um, there's still a lot of cracks that we have to, take a look at later on. Now, for Wednesday, again, we do have the CPI at 8:30 a.m. That's obviously going to be a very important data set, and the likelihood is that the data will be a little hotter this time, just based off of the last, 2 to 3 months of readings. We should be having that expectation that the CPI is going to be following the, the PPI and the PMI, which have all been, coming in, fairly hot over the last couple months. So these readings, um, the CPI month over month, they're expecting a slight downtick, but the core CPI, they're expecting an uptick, and the year over year CPI, they're expecting an uptick as well. So I kind of agree with the forecast right now. We've been seeing the yields rising fairly high. Consumer prices have been definitely going up across the board, and that's going to follow largely with what's been going on with the conflict, oil prices, and all that good stuff. Thursday, we have the PPI at 8:30 a.m. And again, this is really going to follow a lot with what happens with the CPI. Now, for the PPI, they're showing that the forecast is expecting cooler numbers. However, I disagree with that. I think that if the CPI comes in hotter this time, then the PPI will usually tend to follow that. So I'm not in agreement with these numbers. Not exactly in agreement with the previous numbers either, but I do think that they will be coming in a little hotter than what the forecast expects that to be. Now for Friday at 10 a.m., we have the Michigan inflation slash consumer data. That can definitely shift the market sentiment a little bit, so be prepared for that. On Friday, 10 a.m., that time slot can definitely, um, cause the market to push upward or downward depending if these data sets are cooler or hotter. Now, I don't really have any expectations other than I think the consumer sentiment will probably be down while the inflation expectation should be rising, um, which isn't a good thing. Those would be hawkish in terms of the overall data sets and would weigh against the market very likely. Now for the earnings this week, and let's change the screen a little bit. But for the earnings this week, we don't really have too much that's interesting. One we do have to always respect though, which I learned that lesson the hard way, is Oracle. So we do have Oracle on Wednesday afternoon or, in the after hours. Um, you can't count Oracle out, and I know I've said that in the past that Oracle usually isn't the one to really cause a massive market shift, but we saw that one Oracle earnings before where they gained between like 300 to 500 billion dollars um, in a deal overnight. So again, we really cannot discredit them as a company. They definitely have the market, or definitely have the ability to cause the market to pull upward or downward very greatly. Now, Adobe, kind of the same thing. Um, I'm not really expecting anything major out of Adobe, but they do have the company structure to kind of secure some sort of deal like Oracle would, where they can definitely get, some massive cash injection during, their earnings. So those are the two companies that I'm really looking for or looking at this week, and really wouldn't discredit them. They have the ability to have either super good earnings or kind of not so great earnings and really not affect the market that much. But they do have the ability to affect the market. So we will pay attention to what happens with them. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Now, getting into the SPY technical analysis this week, we did have a bit of selling last week. You know, obviously we had a major sell downward, and in hindsight, that's totally warranted because for almost 2 months straight, we were pushed above the 20 MA on the daily time frame, and we could not get back to that level. With these rejections, with the price action on the upper Bollinger, that creates a really bearish condition to where the market can push down very greatly. Now, yes, this was news driven a little bit, but from the technical perspective, this makes a lot of sense. Um, we were kind of ranting and raving about the market needing that 20 MA for a very long time. Now that we actually have that level again, there's kind of two outcomes of what we should be anticipating here. Okay. Either one, we're going to bounce to the upside from this level, or two, we're going to continue breaking down and head towards that lower Bollinger. Now, with that said, and I do want to adjust these arrows a little bit, but with that said, the downside test will still bring some upside. So I've discussed this before where the daily 5 MA generally needs to be retested between each and every level. So with the market pushing down all the way to that 735, whatever it was, yeah, 735, that will be pulling the daily 5 MA down come Monday quite a bit. So on Monday, that daily 5 MA, while it's currently at the 753.40, that's very likely going to be around maybe 748, 749, and another session or two at this 20 MA level will pull that 5 MA down basically to below where the 20 MA is. So with the 20 MA being tested, that now leaves the 5 MA to be tested, whether that's going to happen to the upside or we pull that level down towards the 20 MA and then retest it. But we should be retesting that 5 MA before continuing to push down into the lower Bollinger if we're going to, see that massive lower Bollinger push. So that's kind of what I'm looking for the first thing is that with the 20 MA being around the 746, the 5 MA should be around that 748. That really puts us over the next two sessions basically at that 746 to 748 range. Come Tuesday, say we're still at this 735 range, wherever, um, then that will be pulling the 5 MA even lower than the 20 MA. Okay, and that would create very bearish conditions because the 5 MA would be below the 10 MA and the 20 MA. And, those are one of the first steps to really changing course of direction of what's happening with the market. And kind of want to step back a little bit to when the selling really did start kicking off is that we see the 5 MA above the 20 MA, we see the 10 MA above the 20 MA, and then the price action starts selling downward. We start seeing that 5 MA pulling below the 10 MA, pulling below the 20 MA. We come back up a little bit, but it doesn't break above the 20 MA again. It basically hits that 20 MA level, rejects downward. We try it one more time, tries to pull above that 20 MA a little bit, but again just starts to reject down to the downside very adversely. And that creates that condition where the 20 MA is above the 10 MA, 10 MA is above the 5 MA, and then the price action is just hovering between the lower Bollinger and the 5 MA. Kind of like on the upside here, where we pushed very greatly above the 20 MA, we have the 10 MA above the 20 MA, and we're kind of hovering between that upper Bollinger and the 5 MA range. We continue doing that until the breakdown. So it's still a little too soon to say that okay, we're going to be in some major selling posture at this point. It's way too soon to say that. There's a very large potential that the market could entirely buy this level up and continue heading to the upside. Um, Technically, this 20 mile has been tested, and now that the 20 mile range has been tested, we do not need to retest that level for, roughly again a whole nother 20 sessions. So we have some consolidation to get through. And with that consolidation, we have to really pay attention what the 5 mile is doing. Is the 5 mile going to come down to the 20 mile and then bounce back upward? Or is it going to come down to the 20 mile and start rejecting to the downside? Because that really changes the whole perspective of where the market's going. If the 20 mile or if the 5 mile is going to pull below the 20 mile and start heading to the downside, then that kind of cuts this you know range to the upside off, and it really allows this downside to start taking place. It'll allow us to test the 5 mile to the downside, reject that range, and start pushing into that lower Bollinger, which is at the 729.71. So we still have quite a bit of downside in the current move. However, if we are going to start reclaiming some support here, then a couple things already have happened. We've tested the 20 mile. We have the 5 mile pulling slightly underneath the 10 mile, but that means that we can test that 5 mile and head to the upside potentially. Um, so there's really a lot riding on not just kind of the data sets this week, but the earnings and kind of just the overall sentiment. I know that NVIDIA's CEO is going to be releasing something tomorrow. I don't know if that's going to help the market or not, but there's a lot of room in the current movements. And that's why on Friday I really told people that we need to position at this 20 mile to basically prepare for this upside and the downside at the same time. So we have dated puts and calls targeting both that upper Bollinger and lower Bollinger so that we can give the market some time to do what it needs to do. Um, this is the type of week where I really do expect some consolidation. After such a large move, usually you're going to see some consolidating before the next large move. I could be mistaken about that. Um, Potentially the market can, like I said before, buy this entire weight up. Um, it's still really soon to say. But if we're going to start heading to the downside, then we can start targeting this as a potential head and shoulders. Okay. And potentially, we've already started to close an inverse cup here, which of course my cursor is not going to show that full inverse cup to the downside. But from that inverse cup closing, we should be expecting a little bit of upside for our handle before we continue heading to the downside. So that's kind of where that consolidation kicks in, because either this handle is going to pull up, test that 5 mile, and then head back downward, or we're going to pull upward and reject this handle to the downside, close this upward cup here, basically to the 760, and then start building a handle from there and go from there. Um, I am kind of more in the camp that we are going to be seeing this downward handle, but that can change very quickly. And I just kind of want everybody to really understand that we're in the stance of the market right now where while we did have a very bearish day, things can change super, super, super fast right now. Um, and again, usually each time we go to the 20 mile test, and we've had some 20 mile tests where we've only been at that level for about 30 minutes and then we had a bounce and not seen that level for a whole nother month. Um, this this market right here is telling you very, very greatly that even though we do have room to sell, there has been a lot of buying going on. Okay. Um, yes, we saw a lot of signals out of Friday's session where dealers were starting to hedge the positions. We saw the VVIX absolutely start flying again. I'll show this on the hourly time frame. because we basically went all the way from the 87 up to the 102 within a single session. That's a very, very large reaction from dealers to hedge the downside. Our VIX right now, I believe, is above 20. Yep, it's above 20 right now, which kind of means that the market is in that fear mode. There's that fear in the market right now. Usually I look at the VIX as either being above or below that $20 range. If below, then we're kind of in that bullish stance. But if we're above, then potentially we could be heading upward quite aggressively. So we'll see how that works. Sorry, this is from a different time. But there's this large consolidation channel within volatility right above us. So if we don't um, reject this range and then continue heading downward, then there is the possibility that volatility is really going to start picking up. Okay. Um, so that's just something we have to be concerned about. Overall, I think it's still a little too soon to say that this sell-off is, going to turn into, weeks or months of selling, right? Um, there's a lot of signals that I look for, and we really did not see that. For example, TLT. We didn't see massive buying out of TLT during the selling, which means that people are in cash positions rather than hedging into treasuries, right? Um, that means that that money can go literally straight back into the market, and we have seen that happen before. So it is a little too soon to say if, the market's going to be in a complete sell-off or not. Another thing that I'm looking at is the HYG, the HIG, is that even though we were selling, this is still very bullish structure here. Okay, we still have this very large cup forming the handle, and with that cup, that handle being a nested cup, potentially the selling could just be another handle to the upside, which would just be liquidity at that point. So potentially the selling to the downside throughout the market could just be liquidity to get ready to push up to the next, all-time highs. And that's something that I think a lot of people are forgetting at this point is that just because we had a day of selling doesn't make this market bullish or doesn't make this market bearish yet. We still have quite a lot of room to go through with these moving averages before we're really in bearish territory. So as long as we're not in that bearish territory, we do need to be very cautious that, this can go bullish very, very quickly again. Um, we saw the price go all the way from basically the 754 to the 735 within a single session. So if that can happen to the downside, then the inverse can also happen. And we saw that happen before. On that Wednesday where the ceasefire was announced, we had the market go from the basically the 650 almost up to the 700 range within a few sessions. Um, so as long as we don't see a massive continuation within this downside selling, then there is a very high potential that the market could buy this up. So that's kind of what I'm looking for this week. I know it's not the most set in stone technical analysis to go over, but the thing that I'm primarily looking at is that we should be expecting consolidation, whether that's creating this handle to the downside, whether that's chopping in here. Um, we have a lot to retest with those moving averages. And throughout the streams this week, we'll be going over each and every session of what I'm seeing, whether we're seeing that bearishness starting to really build, or if we're actually starting to see that bullish bounce starting to occur. So I look forward to seeing you all there, but other than that, that's going to be this week's video. It is a little on the shorter side, and I don't want to say the more uncertain side, but it's more on the side that, we could buy a lot of this support right back up. And that'd be extremely reasonable to do. So, with that said, going to go ahead and end the video here. And just a reminder, I am starting the weekly classes this week, so those will be on Tuesday and Wednesday at 8 p.m. Eastern Standard Time. I hope all of you can, join those. And to join those, you do have to be subs to the $29.99 a month, but that comes with a bunch of other stuff, and we'll go over that another time. But looking forward to seeing you all in the streams in the morning. And for those that do want the additional learning, I look forward to seeing you on those Tuesdays and Wednesdays. Other than that, I hope everyone has a good day, good week, and I will talk to you in the next video. Take care, everybody.